welcome to the Radio Revenue Podcast.
It's fantastic to be here. We have quite the document to tear into today.
You really do. We're taking a deep dive into the 2025 annual report, the Form 10K for Advanced Micro Devices, AMD. And I have to say, when I pick up one of these, I expect a lot of, dry tables, silicon wafers, supply chains. But this one reads differently.
Yeah.
It feels like a company in the middle of a complete metamorphosis.
That is the perfect word for it, metamorphosis. Because if you look at AMD 5, maybe 10 years ago and compare it to what's in this report, it's almost a different company.
It really is.
So I think our mission today is to figure out how they're pulling off this pivot, how they're going from, the chip in your PlayStation to a full stack AI leader that's really going toe-to-toe with the biggest names in tech.
It's a massive shift.
Yeah.
And just to hook you right out of the gate, we are not talking about small incremental growth here. AMD's net revenue for 2025 was $34.6 billion. That's a 34% jump from the year before.
Yeah.
You just don't see that kind of growth in a decades-old hardware company.
Yeah.
That's startup territory.
Exactly. And that top-line number is impressive, but the why behind it is what matters. This is the AI supercycle, actually, finally hitting the balance sheet. For years, we've heard hype, we've heard promises, this report. This is the receipt. It's proof the hype is real cash.
So let's unpack that. Let's start with the big financial picture. We have that $34.6 billion number. But the thing that really stood out to me, looking deeper, was the gross margin. It's at 50%.
That's a magic number in the hardware world.
Explain that. Because, in software you see 80, 90%. But for a company that has to build physical things, etch silicon, package chips, 50% seems incredibly high.
It's less about jacking up prices and more about a fundamental shift in what they're selling. It's a classic move to a higher quality product mix.
Right.
And think about it this way. Selling a budget processor for a Chromebook, your margin is razor thin. So much competition. But when you sell a high-performance AI accelerator, like their Instinct MI350 series, the margins are just huge.
Because you're selling the engine for the most valuable workload in the world right now.
Precisely. You're not just selling a part. You're selling the ability to train the next big AI model that commands a premium. So as their sales shift that way, the whole company's margin just floats up.
So it's like they stopped focusing on selling a million Honda Civics and decided to just sell Formula One engines instead.
That's a great comparison. And that shift lets them build up a serious war chest. You saw their cash position, right?
I did, and it is staggering. Their cash equivalents, and short-term investments.
Yeah.
They basically doubled. They're sitting on $10.6 billion.
Wow.
That was about $5 billion the year before. Yeah. I mean, they have some debt, $3.3 billion, but with over $10 billion in the bank, that seems pretty manageable.
It's for optionality. It's for speed. In the semi business, cash is oxygen. You need it for R&D, obviously, but you also need it for strategic acquisitions. You can't make nimble billion-dollar moves if you have to go to a bank every time.
That makes sense. Having that cash means you see a company you like, you can just buy it, and the market loves it. The 10K had a chart comparing AMD to the S&P 500. Over 5 years, AMD just crushed the index.
And that's the subtext here. The market is desperate for a real alternative to NVIDIA. Investors are betting on AMD to be that alternative, and this report is AMD basically shouting back, "We are ready."
Which brings us right to the engine room of all this growth, the data center segment. The report says revenue hit $16.6 billion. That's a 32% increase. This is basically half the company now.
It's the crown jewel, no doubt. And we need to get specific about what they're selling here because it's not just chips. The report calls out the Instinct GPUs, the EPYC CPUs. But if you only look at the chip names, you miss the real strategy.
You mentioned this idea of rack scale before we started, the Helios platform. Can you break that down? Because to me, a rack is just a metal shelf.
That's how it used to be. You'd buy a CPU from AMD, a motherboard from someone else, networking from Cisco. You'd piece it all together. But AI training is different. You have thousands of chips that all need to talk to each other instantly.
Like one giant brain.
Exactly. And if there's even a tiny delay, a microsecond of latency between two chips because of a slow network card, the whole system slows down. The network becomes the bottleneck.
So you can have the fastest brain, but if the nerves are slow, it doesn't matter.
Perfect analogy. So Helios is their answer to that problem. It's a platform where they sell you the whole thing, the Instinct GPUs, the EPYC CPUs, and their own networking, the Polara 400 NICs, all pre-integrated, pre-tested.
Okay, so going back to cars. Instead of selling me just the pistons, they're selling me the entire high-performance engine, fully assembled and tuned.
That's it. And for the big cloud providers, the Googles, the Microsofts, that is incredibly valuable. They don't want to spend 6 months debugging a network card. They just want to plug it in and go. That's how AMD gets those 50% margins.
And that integration theme seems to be driving their big strategic moves, too. I have to admit, when I first read about the ZT Systems deal, I was a little confused.
It's a complex deal, but it's brilliant when you unpack it.
So let's lay it out. AMD acquires ZT Systems for $4.4 billion. Huge check. But then, almost right away, the report says they sold the manufacturing part of ZT to a company called Sanmina for about $2.4 billion.
Right.
So they bought a company just to sell half of it. Why not just buy the half they wanted in the first place?
Because that half wasn't for sale on its own. This is a classic case of buying the brains and selling the brawn. ZT Systems had two parts. They had a world-class design team who knew exactly how to build those server racks we just talked about.
The people who can build Helios.
The very same. AMD desperately needed that expertise. But ZT also had massive factories that actually build the metal boxes. That's a low-margin, high-overhead business. AMD doesn't want to be in the business of bending metal.
I see. So they bought the whole company to get the engineers and the intellectual property,
Yeah.
that immediately sold the factories to get some cash back and get the low-margin manufacturing off their books.
Exactly. It probably accelerated their rack-scale roadmap by 2 or 3 years. Trying to hire that many specialized engineers one by one would have taken forever. This way, they got a whole team ready to go on day one.
It's a talent acquisition disguised as a corporate merger. Fascinating. And now this about a company called Silo AI.
Yeah, a smaller deal, about $665 million, but just as important. Silo AI is a big private AI lab in Europe. This is a pure software play.
Because the hardware is useless without good software.
And that has been AMD's Achilles heel for years. Their hardware has been great, but their software tools have always lagged behind NVIDIA's CUDA platform. Buying Silo is them saying, okay, we need to fix this. We need to make our chips easier for developers to use.
It really feels like they're plugging every hole in the boat. But all this infrastructure means nothing if you don't have customers. And that brings us to the OpenAI partnership.
This is the one that probably kept some executives at their competitor awake at night.
The scale of this is it's hard to process. An agreement to deploy 6 gigawatts of AMD GPUs. I looked this up. A gigawatt is roughly the output of a nuclear power plant. So 6 nuclear plants worth of power for chips.
It is an astronomical amount of power. We are talking about data centers the size of cities.
Yeah.
And the first gigawatt is all AMD Instinct MI450s. This is the confirmation that OpenAI, the kingmaker, is not exclusive to NVIDIA anymore.
But there's a really weird part of this deal, the warrant. I need you to explain this.
Yes, this caught everyone's eye on Wall Street.
AMD gave OpenAI a warrant to buy up to 160 million shares of AMD stock. But the price they pay is a penny per share, 1 cent.
Right.
Why on earth would they give away billions of dollars in stock for basically nothing? That seems desperate.
Not desperate. Strategic. Think of it as a loyalty program on steroids. OpenAI doesn't just get the stock. It's tied to purchase milestones. So AMD is saying, if you spend billions buying our chips, you get a piece of our company.
Okay, so it aligns their incentives.
Completely. It makes OpenAI an owner. If they help AMD succeed, AMD's stock goes up and their warrant becomes even more valuable. It's a golden pair of handcuffs. It locks them in as a partner.
It's effectively buying market share, but with equity instead of cash. And the validation alone must be priceless.
It's incalculable. If the creators of ChatGPT are running on AMD, no one can say AMD isn't ready for prime time. It just ends that conversation.
Okay, let's pivot from the massive data centers down to the device on my desk. The report says they've combined their client and gaming segments now.
Right, which is mostly a reporting change, but it signals how they view the consumer market. That combined segment grew 51% to $14.6 billion, so it's healthy. But the real story here is the buzzword you see everywhere now, the AI PC.
I see that sticker on every new laptop.
Yeah.
Is this just marketing, or is there actually something new inside?
There is new silicon. It's called an NPU, a neural processing unit. You've always had a CPU for general stuff and a GPU for graphics. Now they're adding this third brain, the NPU, right onto the chip with their Ryzen AI 300 and 400 series.
But why do I need that? My AI stuff runs in the cloud.
For now, mostly. But Running everything in the cloud is incredibly expensive for companies like Microsoft. And think about privacy. Do you want an AI assistant that reads all your private emails, sending that data up to a server somewhere?
Definitely not.
The NPU lets that AI run locally on your device. It's faster, it's private. AMD is betting that soon, everything from your operating system to your video games will rely on this local AI.
And on the gaming side,
It's the same story. They mentioned the new Radeon RX 9000 series. Gaming is shifting to use AI to upscale graphics to generate frames. The line between a gaming chip and an AI chip is getting very, very blurry.
it seems like every segment is firing on all cylinders. But there was one red number. The embedded segment fell 3% to $3.5 billion.
Yeah, that's the industrial and automotive side. It's just a cyclical business. The car market's been a bit soft. Industrial demand is down. It's the one part of AMD that's still tied to the old economy. So it's dragging a little while the AI rocket ship takes off.
Speaking of risks, we have to talk about the elephant in the room. Or maybe the dragon. Geopolitics in China.
It's the single biggest risk factor they face. And in 2025, it wasn't just a risk, it actually bit them.
The report gets specific about a product called the MI308. What happened there?
So the U.S. government has very strict export controls on high-end AI chips to China. AMD designed the MI308 specifically to be compliant with the rules, but the rules changed. They tightened.
And this wasn't just a slap on the wrist. It hit their finances hard.
It did. AMD took an immediate $800 million inventory charge in the second quarter. Basically, they had warehouses full of chips they suddenly couldn't legally ship. They had to write off the value.
$800 million. Wow. Gone. Because of a policy change.
They did manage to reverse about $360 million of that later in the year once they got some specific licenses for certain customers. But it just shows how volatile things are.
And there was another detail in there about a potential government tax that honestly shocked me.
This was the most surprising thing I read in the whole report. It notes that U.S. officials expressed an expectation, not a law, but an expectation, that the government would take 15% of the revenue from any licensed sales to China.
Wait, a commission? The government wants a 15% cut of the revenue.
It sounds like it. It's totally unprecedented. You pay taxes on profits, right? This is a cut of top-line revenue just for the privilege of getting a license. It's not official yet, but the fact that it's in the 10K means they think it's a real possibility.
That fundamentally changes the math of selling there. If you give away 15% off the top, are those sales even worth it anymore?
And that might be the point. The strategy seems to be to make it so difficult and expensive that companies just stop trying. AMD is caught right in the middle.
So let's wrap this up. We have a company that's completely transformed. Revenue is up to nearly $35 billion. They executed this brilliant ZT Systems deal. They locked in OpenAI. They're navigating these crazy geopolitical headwinds. 2025 really feels like the year they arrived.
It was their transformative year. They proved they're not just Intel's little brother anymore. They are a primary architect of the entire AI infrastructure layer, a true data center powerhouse.
It's an incredible story. From near bankruptcy a decade ago to this.
But I want to leave you with a final thought. We talked about them combining client and gaming and the huge focus on data centers. If the future is AI running in the cloud, are we maybe seeing the end of the personal computer era as we know it?
What do you mean by that?
Well, for 40 years, the PC was the center of everything. But if all the real value, all the intelligence, is moving to the server rack in a data center somewhere, does the device on your desk just become a dumb screen again? A window into the real computer?
A glorified terminal. A nice screen with a Wi-Fi connection.
And AMD seems to be positioning themselves to own both the terminal and that mainframe in the cloud. It's a completely new world for computing, and they are right there building the foundation for it.
It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.